Good afternoon and welcome to Midcap Radar live from the CNBC-TV18 Motilal Oswal studio. I am Vamakshi Doria and with me is Mangalam Malu. Good afternoon to you, Mangalam. It's so good to have you on the show. Really excited to anchor with you. But you know what's not exciting is the markets right now. They have been consolidating since morning in a very narrow 100-odd point range.
Well, I'll tell you one thing. When I started out in CNBC-TV18, the first show that I anchored was Midcap Radar. So it's always, it feels very comfortable, feels like it's home to come back to Midcap Radar. And it's a show that's very close to my heart as well. Speaking about close to your heart, it's some midcaps which are doing actually well. So the frontline indices, while they're slightly subdued, they are well behaved within the range that we spoke about earlier as well. The broader market's doing well with nearly 1,400 stocks which are advancing as against 1,100 stocks which are declining. Tells you that your portfolios are looking better. But all that and more in just a bit. First up, all the top stories that we're tracking this afternoon. Midcaps gain even as frontline indices consolidate in a narrow range. It's the FMCG, metals and auto pack which are the big drags, while PSU banks and financial service, they clock some gains.
Techno Electric up over 12% after reporting their Q4 numbers. Revenue comes in at multi-year high in FY25. EBITDA margin at highest level seen since FY22.
Adani Engineering up over 9% after reporting their fourth quarter numbers. Revenue up 25%, EBITDA surged 21%. The management tells CNBC-TV18 there is scope for margin improvement, particularly in the ethanol business.
Defense sector stocks Bharat Dynamics and DCX Systems react to their Q4 numbers. Bharat Dynamics reports strong revenue growth of almost 41% in FY25, but profitability takes a big hit. Meanwhile, DCX Systems reports a sharp miss on guidance of 35 to 40% growth.
ITI, that's the stock on our radar after their fourth quarter earnings. We had the net loss, which narrowed to 4.5 crores versus about 230 crores last year. And that on the back of a revenue surge of 75%. That stock up 8.5%.
Well, 24,798 thereabouts, that is where the Nifty is at. It did attempt to recover from the day's lowest point, but it's still trading in the red. The mid-cap end of the market, though, is doing quite well. The mid-cap index, as of now, is trading with a gain of nearly 0.3%. But as far as some sectoral indices are concerned, it's a mixed picture. Nifty Media is doing well, so is the PSU Bank Index. We also have the FMCG Index, which is down and out in trade today, mainly dragged by ITC. But, there's a lot of action happening in the mid-cap space. And in our special segment, Mid-Cap Movers, we now have Hormas to take us through the mid-caps that are moving around in trade. Good afternoon, Hormas.
Good afternoon, Vamakshi. And a sandwiched session brings no surprises between two expiries. And you're seeing the moves on the index as well. But, of course, there is plenty of stock-specific action in the broader markets. It start off with those that are on the losing end or gaining end of things. Actually, it's Schneider Electric building on to the gains after its results yesterday, 8% higher on that stock. And look at Hitachi Energy. Bharti Hexacom is continuing to move to new highs as well, 4.5% higher on that stock as well. The earnings reactions in today's trading session have not been any surprise. LIC, of course, being the stock of the day now, 7.5% higher on that stock, nearing in on its original IPO price of 949. Techno Electric, of course, the top gainer on the Nifty 500 remains so, 13% higher. Adani Engineering and Gujarat Fluoro, after the downgrade that came in earlier in the day, is also down 5% in today's session. A lot of these smaller PSUs have done well in today's trade. ITI, of course, an earnings reaction, 8% higher, and that has reflected on some other names like IFCI and MMTC as well, both of them trading with gains of 11 to 15% in today's session. Onto the volumes then, stocks that are doing well on the back of volumes. Look at MRPL, the spike that came in on the stock towards a few minutes earlier, 5% higher on that stock. Similar move seen on Chennai Petro as well, and Welspun Corp too at the highest point of the day on very strong volumes. And lastly, some stocks that are on the losing end of things. Look at IKS Health. ACE, of course, after its results, dragging to lows of the day, and Escorts Kubota too at the lowest point of the day. Some selling pressure intensifying in that stock, 4% lower here. Back to you guys.
All right, Hormas, thanks a lot for that. Spoke about a bunch of stocks. Just keep an eye out on Precision Camshafts, up 16% now, reported its numbers post-market yesterday. There's a big jump in consolidated profits, and that's reflecting in the way the stocks moved right now. Also keep an eye out on a couple of these, SUV makers. Over the last hour or so, we've seen some purchase in Force Motors, which has moved to the high point of trade, and SML Isuzu, of course, CV maker more than an SUV maker. That stock too has moved higher. About 5% recovery from the lows is what we've seen. And And before we, talk about something else, just watch out for Godfrey Phillips as well. On a day where ITC has seen some selling pressure, maybe because of the overhang of selling on ITC going forward, investors, are they looking at Godfrey Phillips? Over the last 12 or 13 quarters, the company has reported better volume growth than ITC, and Godfrey Phillips as a stock has returns to show for it as well. But we are excited to unveil our brand new global business news channel, the all-new CNBC TV18 Prime. This brings you insights from policymakers, business leaders, economists shaping both the world and India's future. CNBC TV18 Prime decodes global shifts and their impact on Indian businesses, gives you unparalleled insights. Tune into CNBC TV18 Prime at 12 noon daily for the Global Reset and Global Lens at 8:30 p.m. on weeknights. Well, we were talking about some of the stocks doing well from the broader markets. Escorts Kubota, on the other side, has seen some sell-off, so at the low point of trade. IRCTC reports its numbers today, is also seeing some bit of a sell-off. And VIP, which has been quite an underperformer, rank underperformer, has continued to see some traction by and large, in a range, but keeps seeing these sporadic moves every once in a while. This month, it's up 16%. But remember, from the highs, it's seen a big cut as well. But stock on our radar is Gateway Distriparks. Reported a soft set of fourth quarter numbers. The bottom line was impacted by an exceptional loss of over 250 crores. But the consolidated results were actually supported by, the consolidation of Snowman itself. Let's talk about their main organic business, which is that of inland container depots as well as container freight stations. Samvid Gupta, who's the joint MD at the company, joins in now. Thanks a lot, Samvid, for joining in. Let's start with the targets that you have set for yourself for this year. Rail volume for FY25 was down 2%. CFS was just about flat. For FY26, what is it that the street should anticipate? And EBITDA per unit, if you could give us a sense.
Hi, good afternoon. Thanks for having me on the show. So we are looking at double-digit growth on the rail side. The CFS side will probably see some minor growth of about 2 to 3%. But all this depends on long-term, factors like geopolitical situation, also the tariff situation, which we'll get clarity in July. But there are some positives like the FTA is being signed by India and UK, India and EU also in discussion, India-US trade deal, whatever ends up happening. There should be a realignment in global trade in favor of India. So we're positive on the long term, but double-digit growth is still on our minds overall.
And what about EBITDA
and on
per
the
unit?
EBITDA per TU on the rail side, we're looking at about 9,500. Hopefully, we can push that to over 10,000 per TU after the JNPT leg gets connected on the DFC. And on the CFS side, it'll be about 1,500 per TU.
All right, and what is the kind of double stacking that you managed to achieve in FY25, and what would be your target going into FY26?
So our average was 40% for the year. And this was basically dragged down in Q1 when the whole Red Sea crisis was going on. So Q1 was at about 33%, but we've managed to consistently do over 40% in Q2, 3, 4. So our target for next year is about 45% on double stacking.
All right, double stacking 45%, 40% is what you've done. You spoke about the impact that, the JNPT being connected to the Western Dedicated Freight Corridor comes by. There were reports that suggested that it actually is, the opening is likely to be brought forward from December to October. Have you heard something on that? And if that were to happen, what could that do to your volumes and market share?
So it really depends. I mean, 2-3 months here there won't make a large difference, but basically this will be an alignment of trade again, shifting from other ports to back to JNPT over a period of say 1 or 2 years. So we don't expect any immediate ramp up like that, but over time we think we would benefit as it's longer distance. So longer lead distance would mean better revenue and margin for us. As well as where we have a pan-India license, and not all rail operators have a pan-India license. So we'll be one of the fewer operators out of JNPT.
Sure, and how many terminals and ICDs have come on stream in FY25 for you, and how many more are likely in FY26 then?
So we have 5 ICDs and 5 CFSs. We don't have any new ones opening up this year. We have plans for 2 new locations, but land acquisition has been a challenge, so we've not been able to finalize yet. Whenever we do finalize, it'll take 2 years minimum for those to operationalize. Meanwhile, what we've started looking at is some asset-light options where we operate out of third-party terminals or third-party sidings, which we weren't doing in the past, and some domestic movement as well. So hopefully 1 or 2 of those locations should come in within this FY.
So what should that do to your total overall handling capacity? That's point number one. And secondly, what does that do to your market share? I mean, I briefly did ask you about that because, a week ago we got Container Corp. They said that they've maintained their market share, whereas everyone else is claiming that they've gained market share, which is the other players. So have you gained market share? Is it at the expense of Container Corp? Or what is really happening in the market?
So our NCR market share has gone up from say about 16%, close to almost 17.5 to 18%. It's not specifically come from one operator, it's come from all across. Ludhiana, we went down to 21%, but this year we've gone back up to 27, 28%. Again, it's from multiple operators that we're doing. We don't measure on a like-to-like basis with Concor our market share since they operate out of a lot of more locations. So we only focus on the regions where we're operating in. So these asset-light locations again would be new geographical locations for us. So that would increase our pan-India market share, but not again at the expense of anyone else.
So in the regions that you operate with Container Corp, where does your market share stack up against? How does that stack up against them, and how has that moved?
So NCR, we've gone from 16 to 18%. Concor, I'd say, still dominating the NCR market share with over 50%. And they've been stable at that figure. Ludhiana, like I was saying, 21 to 28% we went, and all the operators would have lost some market share while we did that. And Uttarakhand, we've gone up to almost 37% in this last quarter, which we were at about 28% the year before. But overall markets of Ludhiana and Uttarakhand have actually degrown. So that's also playing a factor in why our volumes are not rising up as much as our market share.
Sure. And what happens to your profitability when you have, an asset-light approach when it comes to your additions, and what does that also do to your return ratios?
So there's no capex involved in those sites, and the rakes are also on lease basis. So that way the ROCE would improve. But the EBITDA per TU would be lower as we're not going to get any handling income or any first last mile income. But it would still be to the order of about 25% margin that we'd be operating at.
And with the freight rates the way they are, with your increased volume targets, etc., what's the kind of revenue growth that you're penciling in for FY26?
Again, like I was saying, it depends on the geopolitical situation and the tariff situation, but we are looking at least a 10% growth, and this is not counting the Snowman consolidation coming in.
You gave us a nice setup with the Snowman thing there. Over the last 1 year or so, 45% has gone up to 50%. Last 2 years, 40% has gone to 50.1%. Where do you take it from here? I mean, do you intend to take it beyond 51% or just hold it steady for now?
So we're not against the idea of increasing our stake. We basically first we'll take care of Gateway's capex plans and the dividend that we pay out regularly. And if there's a free cash flow situation, then we could look at increasing our stake. But again, no immediate plans on it.
That's not priority. After having raised it with so much, you don't intend to rush into buying more of Snowman, right?
Actually, yes.
All right. Thank you so much for joining in and giving us all those updates. With that, we'll simply do a short break, get you more on the markets and a lot of stock-specific action. Stay with us.
People talk about the Flipkart mafia and all the startups that came about.
I think you're part of the mafia.
I think it's the startup university. Still equal number of good decisions and bad decisions.
Yeah.
But the fact is that looking back, vision is always 2020. And I think we have that advantage building PhonePe after having seen the Flipkart journey.
I want to have the ability to look somebody in the eye and say that I have a clear path to profitability before I can say that I will IPO.
I think the business is in a good place, the org is in a good place, the sector is in a good place. If you're a market leader in a growth sector, I think it's a good time.
Who's the maverick and who's the goose, since we're talking about the
he's
wing?
the maverick.
He's the maverick.
You're both pointing at each other.
I think we have more conversations with each other than our wives.
You've known each other longer than you've known your wives, so it makes
That is true.
kind of makes sense.
That is true.
Welcome back. You're watching Midcap Radar on CNBC TV18. Now, from one management to another, Info Edge reported their Q4 numbers, and the company saw muted revenue growth in the quarter gone by. Their margin also came under pressure. My colleague Vinny Motiwala spoke to Chintan Thakkar, whole-time director and CFO at Info Edge, and began by asking him about hiring trends across sectors such as IT, BFSI, healthcare. Listen in.
When you look at the overall trend, yes, April, is slightly, like you suggested, that it could be slightly slower. But if I take a very broader look of the JobsPeak index, as well as, what we are seeing in terms of, we have just recently announced the results. So what we have seen in terms of the monetization, I think we are seeing that it has been a strong quarter in the past. And what we are hearing from the market, is that this seems to be a kind of a momentum which is continuing. Well, I know that this is not exactly what the overall scenario looks like, but on the ground, it seems that we seem to be doing better than what probably JobsPeak index suggests. And this is yes, IT. When you speak of IT is a very large sector, but if you kind of slice and dice, for example, GCC seems to be doing much better, right? Some of the IT product companies seem to be doing much better. IT services, which are mainly the export-driven kind of a segment, I think there, it seems to be a little, sluggishness. That seems to be a little slowdown over there, and that has been the trend, past, many quarters. So, but otherwise, non-IT, for example, you talked about the BFSI, the healthcare. I think they all seem to be suggesting, that there's a momentum. Tier 2, Tier 3 towns seems to be suggesting that there's a momentum. So, given the fact that our billing has last quarter grown by almost like overall recruitment solution has grown by 18% plus, I think that indicates that the on the ground, I think there seems to be a good uptake.
Are we seeing any sort of an impact because of this uncertainty of Trump tariffs? So my question comes in, are we seeing any impact of that? And are you also seeing any impact given that AI also is coming in? So in terms of the trend, is there a clear shift on that front as well? And do you expect that billing growth, like you mentioned as well, around 18% that you saw this time in Q4, will that continue in FY26, or a better growth is what one could envisage now?
Yeah. So the impact of, let's say, the technological development that are happening, right? AI is something which is most talked about, and it's a mixed bag. There are certain segments where, let's say, the guys who are there in areas which are related to AI, right? Machine learning, data science, some of those, jobs, I think they are, highest in demand. I'm sure this year their increments and everything also would be very high. So there seems to be a demand-supply gap where demand is very high and supply is limited. While some of the segments, which is more like a PPO type of segment, customer support segment, that's where we are seeing that there could be some impact of AI. Although even in that segment, in terms of the quarterly numbers that we have, I think there seems to be a bit of growth over there as well. But we do hear some kind of slowdown in some of those type of segments that we anticipate. But in the high end, I think there's going to be a much more demand. I think there is a kind of a shift that may happen in terms of the job profiles, but overall we are not seeing anything which we would indicate that AI is kind of impacting us directly, right?
Absolutely. And billing growth, sir, will we expect this 18% rate that we saw in Q4 to continue for this segment?
Look, most of our billings happens in the last few days of the end of the quarter, right? So this is little too early for me to say that what the billing would look like.
Mr. Chintan, what I want to know is in terms of 99 acres, real estate trends, how did that shape up quickly in Q4? And, losses seem to have, quarter-on-quarter basis, I'm saying, has seemed to have expanded a bit more or increased a bit more. So, what are we expecting there as well? On the PBT front is what I'm looking.
Yeah. Again, when you look at the this quarter picture as well as the full year picture, I think we are for the full year, and we had promised this earlier that our goal is that we kind of become EBITDA neutral, and I think that's what we seem to have achieved. We are almost there. And if you look at the billing and the total expenses and the total cash expenses, if you look at it, then on cash basis, we are kind of EBITDA neutral. In fact, in this quarter, in Q4, we have generated cash, which kind of offsets some of the cash burn that happened in the previous quarters. So I think this quarter has been encouraging. Also, what our understanding is that we seem to be gaining in market share, which is even far more important than just the cash break even that we are talking about. So it's very encouraging. We'll continue to push the pedal to gain more and more market share. And again, I think I must add here that AI is really helping us in getting the cost efficiency, whether it's marketing or whether it's also in terms of how we go to market.
Sure.
I think it's really helping us. It's also helping us in business like Jeevan Sathi in terms of how our algorithm works. I think they are far more sophisticated than what it used to be in the past.
So for Shiksha, a quick question. There's higher visa rejections now in the US as well. There's so much uncertainty over there in terms of universities. Are you seeing any change in terms from that front, in terms of customer trend moving more towards the domestic market? And also the billing growth, that's 16% for Shiksha, while revenue growth is at 1.6%. So what is the reason for this gap, that I'm seeing in billing growth as well as revenue growth?
Yeah, so again, a great question, because when you split the Shiksha into domestic business as well as the study abroad, like you said, we have a lot more headwinds, and this is actually kind of declining. But domestic business is growing at a much faster rate. So right, when we aggregate, I think the real growth story of domestic business actually does not come out. So domestic business is doing very well. The difference between the billing and revenue, like I said, that look, billing is the lead indicator. Revenue is what happened in the past few quarters. So I don't see there's too much of a gap over there. But I think one should really look at from the business analysis standpoint, one should look at the billing, because that it tells you what actually happened in the quarter and what the trend line for future looks like. That sets the tone for future.
Okay. And sir, last question on Jeevan Sathi. Obviously you spoke a bit about it. The losses have also narrowed down. So can we expect in FY26 Jeevan Sathi, in terms of the PBT level, we would see some profit there, as well as competition? How is that shaping up right now? Outlook for FY26.
Yeah. So look, when you look at Jeevan Sathi, there are different markets. There is no one national market.
Yeah.
Market is split in terms of the different communities and geographical regions and linguistic kind of different classes, right? So where the place where we are stronger is mostly it's Hindi belt, and Hindi belt seems to be growing, and we seem to be cementing our leadership position over there, right? So in some ways it is very it's not appropriate comparison to look at us directly with the competitors. Let's take Bharat Matrimony, which has got a strong brand in the southern region, but we don't have much presence in the south, right? So we are far more north and in the belt, so it's very hard for us to really compare that.
Okay.
But we made certain changes about how we go about our platform. We made it about 3 years ago, and that seems to have worked for us, and that's why now we are seeing that not only the revenue and the billing seems to be growing. For example, this year, overall we have grown, for the full year we have grown at like about 30% plus. Mm-hmm. That's a very healthy growth, and with that growth we have been able to achieve EBITDA neutral.
Well, that was the management of Info Edge. The stock as of now is taking a hit. The stock is down almost 1% in trade, but has seen a recovery from the day's lowest point. But that's all we have on this edition of Midcap Radar. From Mangalam, me and everyone who put the show together, thank you for tuning in. But don't go anywhere, because we have your stocks up next.